Thank you for joining us today, Brady, to talk about the performance of the bank in the second quarter. How would you characterize the performance generally in the second quarter?
Well, obviously the results in the second quarter were impacted by the cross-border settlement that we made with the U.S. However, our businesses actually made good progress. I think our strategic businesses in private banking and investment banking had very solid results. We made good progress on the cost side. We continued to build our capital, and I think actually momentum with clients was quite good. And one thing I would like to do is to thank all of our employees for all of their efforts during what was a challenging quarter from a markets point of view, and a very good result.
You briefly mentioned the litigation, and it's been 2 months now since we settled with the U.S. authorities. What's been the impact on our business and with client interactions?
Well, obviously getting the U.S. cross-border matter, which was our longest outstanding and our biggest regulatory and litigation issue behind us, is something that's been very important. And the underlying behavior we deeply regret, we take responsibility for it, and getting that behind us was something that was very important. I think you can see from the results in the quarter, I mean, obviously this was an issue that we had to manage through, but we're actually very pleased with the support that we saw from clients, and we very much want to thank them for the support that they provided for the bank over that period. And also the very hard and I think effective work that our employees did through that period was something that we're very, very grateful for. So, our hope is that, we can continue to run a very compliant business, one that is absolutely focused on doing the very best job we can for our clients. And that's something that will clearly will out over time.
And looking to the business, what were the highlights in private banking and wealth management this quarter?
Well, as I said, private banking actually had a strong performance in many aspects. I think clearly the net new asset performance was something that was very strong. We saw good performance, particularly from Asia Pacific. Also, our Suisse business was very strong on that front. I think in addition, we continue to do well with our ultra-high net worth client base, where we've gotten now to 47% of our business being in that space. So that's something that we continue to see as a bright spot. And in fact, our lending programs against that business are something that I think continue to show very good progress. And also on the cost side, I think we did a very good job in making progress towards our ultimate cost target of 65% on a cost-income basis. So that's been a big effort and something that is paying off now. So I think those were all positives.
And if you were to look at the more disappointing areas in that business?
Well, I think the top-line revenue was somewhat disappointing, being impacted by the conditions in the markets as a whole, where obviously trading markets were more subdued over that period. And that obviously had an impact on the gross margin, where we clearly saw the gross margin reduced by more than we would like to have seen. On the other hand, that was tempered by our net margin, which remained quite strong, and obviously as a result of some of the cost-cutting measures that we've taken.
And what about the highlights in the investment bank?
Well, we had a strong quarter in the investment bank, particularly the fixed income businesses in credit and structured products were businesses that actually performed very well. We also saw very strong results in the underwriting businesses, both in equities and the fixed income side. And so overall, it was actually a good result, and again, what was a more challenging set of conditions in the quarter.
And in the release, though, there were some weaker results in investment banking.
Yeah, we saw some of the businesses more affected, so I think certainly our derivatives business, our cash equities business, and our macro business within the fixed income area were all impacted by market conditions and areas where we clearly would have liked to have done better.
You mentioned the macro franchise. How are you continuing to evolve that?
Well, we took early action in the macro business within fixed income. As you may remember, that's a business that we clearly saw as being impacted by regulatory developments as well as market structure aspects of that business. So we've really, for the last close to a year now, been actually reducing our capital in that business as well as our expenses. We have now taken additional steps during the course of the second quarter to actually have made a decision to exit the commodities business. But we're going to continue to focus on making this business very capital efficient, serve our clients well, but also make sure that it is a business that's fit for the new regulatory environment.
And lastly, looking ahead to the second half of the year, what are your main focus areas?
Well, I'd say first and foremost, we want to make sure that we're being an excellent partner for our clients. That's something that we're very focused on. I think within the private bank, we're going to continue to focus on our emerging markets businesses, our high and ultra high net worth customers, and the lending initiative there is something that I think is going to be very strong. And continuing to provide excellent investment products for our clients as well is something that I think is going to be a big focus. On the investment banking side, we'll continue to be focused on making sure we do an excellent job for our customers, but are also running a very capital efficient business. And I'd say overall, we continue to put a very high priority on making sure that we're running a very compliant business and that we're really running a business that has the highest standards of ethics across all parts of the business. And that's something that we've clearly been focused on for a while, but that we think is something that you can never rest on and something that we need to continue to be very, very focused on.
Thanks, Brady, for sharing your thoughts with us today.
Thank you.